Hi, traders. Here's a little brain game for you. Certainly, you've probably heard me say so many times now how the market is fractal in nature. Well, what you're looking at on your screen right now is an EKG. Now, I know I did a post like this on my business page, and I attempted to do it in the group. However, I don't think there were some that weren't quite ready for that deep of thinking. Now, I don't say that to be ugly. It is just what it is. However, I'm going to try one more time. So, as this heartbeat, which is really a very good representation of what we see in the markets often, very often. And so from left to right, as you see, as the monitor is going from left to right, you see what could be considered the opening of Asia. And then you see what looks like a small initial high. And then, of course, as the market settles back in close to price opening, you could certainly see that, or you could interpret that as, say, the close of Asia, and then you get this very large stop hunt high, and then price reverses, comes down, retraces, and closes for the day. And then the market opens and it starts all over again. So I've had some people say, well, Earl, how can I anticipate what's going to happen on day two? Well, the market has its own specific rules that it goes by. Like we've mentioned so many times before in the group, if price is coming from a peak formation high, for example, well, as price, excuse me, as price moves away from that peak formation high and it closes out for the trading day, it goes into consolidation. On day two, when the market opens and it goes through consolidation, being that I already know that price came from a peak formation high, I should expect a stop hunt high, because that is the day two trapping of the buyers when the market is actually going short. So that's the trap. With that said, you can sort of anticipate what the market is doing. That is, you could look at that as, how do I want to put it? Because I don't want to discourage anyone from counting levels, because if counting levels work for you, count them. However, what I'm trying to convey is that if you understand the pattern, how it plays out on each day within a particular cycle, then you can trade it. This particular video is basically a brain game, an exercise for you to visualize. What are you going to anticipate next? You can't see what's happening to the right of the screen because it's not there yet, but just visualize it. It is a fractal version of what just happened on the left side of the screen. So if you use this as a brain game, you might find it useful to help you when you approach the charts and you have marked up your peak formation high or peak formation low. It's really just that simple once you understand what the pattern is. And just for those who are watching this video and probably haven't seen any of my previous 2-minute tip drills, which this is more like an extended 2-minute tip drill, the pattern is consolidation, stop hunt, and trend continuation. And that particular pattern plays out, be it just for one day or a weekly cycle or a monthly cycle. To be perfectly honest, even on a quarterly cycle. But that's when you're getting up that high, you're talking about position trading, and not very many of us in the group want to be position traders. However, if you understand the cycle once again, you'll have a good understanding of what to anticipate. Price does move from one zone to the next, and those zones are dictated by price. So I think I'm going to wrap up my thought because we're going on 6 minutes, and I really just want you to just play this. You can mute it if you like, if my voice seems to be annoying or whatnot. But what I want you to do is just let this play, and just look at it and just sort of say, okay, I see what happened first go round. I understand the pattern. What's going to happen the second time? Hopefully this exercise will work for you. If it does, please leave a comment, in this post. And certainly, good luck to you. And let's go get these pips.